Hi, it's Lee and welcome to the Tech Economist. I wanted to start taking a look into what Q1 might bring us, just to get a rough idea. Obviously, this will be the first quarter where we've seen these significant price reductions, so it might be beneficial to gather an idea of what effect this could have, and in particular, how it may compare to Q4. So let's start with deliveries for each model from each factory. Now, for Fremont, I don't anticipate a big number for Model S and X. If we look at the inventory in the US, it does tend to be high, so I'm going to guess that they're probably about a similar level as we saw in Q4 of around 17,000 units. Now onto the Model 3 and Y. So if you recall, in Q3, Tesla started their gap delivery method. This resulted in a larger discrepancy between vehicles produced and vehicles delivered. In fact, around 21,000 fewer 3s and Ys in Q3 and 31,000 fewer in Q4. That's 52,000 total, in addition to the previous inventory. This was also despite big price drops we saw in Q4 in order to unload some of this additional inventory. However, then we saw even larger price cuts across the board, and in addition to that, Tesla also get tax credits in the US, even further reducing prices to the consumer. As a result, we've seen US inventory drop, especially for the Model Y. In fact, the Model Y seems so popular, Tesla may raise the price again after 2 price raises already. As a result, I'm therefore going to increase Model Y and Model 3 deliveries for Q1, as I believe they must have likely eaten into some of this excess inventory. For these reasons, I'm giving Fremont a record high of 177,000 deliveries for the quarter. As for China, Tesla produced 66,000 vehicles in January, but expect to increase production an additional 20,000 a month from now on. Surely that must be a good sign for demand. And of course, Tesla have dropped the price considerably in China and is now competitively priced against a lot of the local Chinese competition too. I'm going to give China a total of 195,000 deliveries for the quarter, which I think is still well under the capacity those factories are capable of. So I feel like this is being somewhat pessimistic even. Now, a lot of these China-made Teslas are exported to Europe, and we are hearing that there are potentially some demand issues in Europe, possibly due to the fact that these vehicles no longer have ultrasonic sensors for measuring distances, and apparently the software has not been updated yet in order to manage. I'm not entirely sure as to how big a deal this is, but I just don't want to be too overly optimistic, despite possibilities that deliveries may be higher. Again, there's also some inventory in various markets left over from the previous 2 quarters. In fact, I hear rumours that there may be something like 70,000 Teslas total in inventory at the start of this year. You might think that with these price cuts, that a lot of them may have been sold. Well, this is a really tough quarter to work out, but it may at least give us some direction. I think we'll see a lot of variance from other estimates though. As for Texas and Berlin, I think I'll keep them at around 45,000 units for the quarter, which is 3,500 a day at the current run rate. I know Berlin is possibly seeing some line upgrades and production will be down, but I'm not sure how much of an increase we might expect. I guess it's a bit early to try and determine just yet. This comes to a total deliveries of 462,000 for the quarter. Most estimates so far are around 430,000 or under. However, if you ask a Tesla bull right now, some are even thinking the number could actually start with a 5. So yeah, like I said, there will be big discrepancy between estimates this quarter. Of course, this is still early on in the quarter, not even halfway through yet, so we might have something a little more accurate towards the end. Personally, I think 500,000 does seem a little on the high side, but equally, it wouldn't shock me if we're in the high 4s. But an estimate of around 460,000 seems to be fairly within the two, and given production and inventory, it's certainly possible. From there, we move on to the all-important margins. Now, the Model 3 actually only came down in price about $3,000, except that the consumer now pays $10,500 less, because it also qualifies for the tax credit too. Therefore, the Model 3 in Fremont is still getting a good margin of around probably 33%. Initially, the Model Y had to really reduce its price to qualify for the tax credit, which was affecting margin, at a guess from around over 40% all the way down to about 24%. However, the price cap has been raised from $55,000 to $80,000 for the tax credit, meaning that Tesla can now charge a proper market clearing price for the Model Y. Remember, even at $55,000, this is only $47,500 to the consumer. It seems we've discovered that a Model Y at this price is incredibly popular. Even the most basic BMW X3 starts at $45,000, with far fewer options and not even all-wheel drive, not to mention no gas savings. Anyway, I estimate the Tesla are now at 26% margin for the Model Y in Fremont. Now we have the Shanghai factory. We saw prices cut to insane levels in China. A Model Y starting for under $40,000 and a Model 3 at around $35,000. Yet here's the thing. I estimate that Tesla are still able to generate 21% margin for the Model 3 and 23% margin for the Model Y. I know, perhaps not as high as from Fremont, but remember, Fremont is getting such good margins still mainly due to the massive tax credit incentive there. Over a 20% margin is still a great margin for a car, especially if this may even be temporary due to rates being so high and the market for new cars not being what it once was. On to the two new factories. Unfortunately, due to the low run rates of these factories, they're not really able to hit the economies of scale that we usually get from Tesla. The ramping has been slow, and I think the cell supply is still limited. These factories were at about break-even when they were producing around 2,500 vehicles a week. At least that was about the run rate when Elon told us that they were now at a positive gross margin. Unfortunately though, despite the run rate up around 40% more since, the price drops will affect the margin for these reasons. I'm therefore only going to give these factories 5% gross margin. I've made mistakes in the past giving these factories too high a margin, so I want to be careful not to make the same mistake again. Then we can add in some FSD, which now will also have somewhat less deferred revenue. There is almost $500 million there. That's pretty good. That means FSD is bringing in around $2 billion gross profit a year now, taking total order revenues to $22.6 billion and gross profit to $5.2 billion. This is with an ASP of $48,176 and a gross margin of 21%. In the Q4 earnings call, Elon said the ASP would be above $47,000 and expected margins to be above 20%, excluding regulatory credits. So I think this is fairly in line with that. Then when we add in FSD and regulatory credits, we get a gross margin of 23.9%, down from 25.9% in Q4. That's not actually down as much as I would have thought. In fact, I'd be very happy with 23.9% margins given such huge price cuts. Also, bear in mind that Q4 received a substantially higher regulatory credit payment. Now, moving on to the other areas of the business, which are starting to become a lot more exciting. Firstly, I want to add in the subsidies here. Tesla get to share half of Panasonic's subsidy of 35 gigawatt hours a year from Giga Nevada, which is about $196 million a quarter. Added to that, Tesla are producing around 1 gigawatt hour of 4680 cells a quarter, which should be a further $45 million. So a total subsidy for the quarter of $241 million. There'll also be subsidies for Tesla's megapacks, but I'll just include them into the cost of the packs. For energy, we're hearing rumours that Tesla are making 12 megapacks a day already. This is outstanding. If each megapack is worth $2 million, then that's around $1.8 billion in revenue for the quarter, plus Powerwalls. Except that's the current rate. We might expect them to increase that run rate through the quarter too. Therefore, I'm going to estimate that $2.3 billion in revenue from energy this quarter. I'd guess that subsidy would be about $50 million if that's the case, which is nearly 5% of the revenue. I think Tesla were on around 20% gross margin for megapacks. So if we add an additional 5% in there with credits and adjust for the rest of the energy, I think we might be at around 22% margin now, or a profit of $600 million just for energy. It's going to be very exciting to see this side of the business finally expand. As for services, I'll just give a similar profit to Q4. I'll increase OPEX slightly, just as good measure, resulting in an income from operations of $4.5 billion. This is up over $500 million from Q4, despite all the price drops. Okay, admittedly, this is with 60,000 additional vehicles delivered, but it's still good to see profits increasing despite such price drops, in what is a difficult economic environment to be selling cars right now. We end up with earnings of $4.3 billion, $600 million more than Q4, or a 16% increase. That's pretty good quarter over quarter, and gives a non-GAAP EPS of $1.35. If we analyse that, then we would be at around $17 billion for the year, and these deliveries were fairly close to the average deliveries of the 1.8 million guidance for the year. However, if we are closer to 2 million, then this number will obviously be higher, and we should also see more growth in energy to come too. This is a very important quarter for Tesla, although it almost feels like every quarter is the most important. The deliveries numbers will obviously be very important this quarter though, as to identify how Tesla's demand will be with the new price cuts. And then to see just how the earnings have adjusted with the price cuts will also be very important for the results. In addition to that, seeing more numbers on energy is also interesting. I would definitely be happy with this as Q1 earnings. I'll do a more updated version when we get delivery results. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.